Hello, this is AJ speaking. Today I want to talk about Ford's US inventory and about the potential investor angle. So let's dive right in. So in this analysis, you can see a couple of metrics. One is the number of inventory days. You can see the inventory, 620,000 vehicles as of end of December, and then the trailing 3 months sales. These are retail sales, so these are sales to customers and not to dealerships. And what you can do is with these numbers, you can then work out the days of inventory. And in the auto industry, you would generally aim, if you're an auto company like Ford with a dealership model, you would aim for something like 65 days of dealer inventory, ideally a little less. But as soon as it goes above 70, it's a bit worrying. This implies elevated levels of inventory, and obviously elevated levels of inventory imply that you've been producing more vehicles than customer actually bought, and that's why they started to pile up on dealer lots. And what a lot of people don't realize is the vehicles, and I'm not going to go into all the little outliers, but I'm talking about the vast majority of sales. All the vehicles that you see on dealer lots have been recognized as revenue by the company. So, so for the revenue recognition and therefore for the cost and everything that you see in the income statement, and ultimately an earnings per share is not how many vehicles retail customers bought, it's how many vehicles Ford put on dealer lots. So, and here's the interesting thing about this. You can see here the inventory, this light blue line. During COVID, it dropped massively, but you can see here the years. It was between 600 and 700,000. But the retail sales number was much, much higher. You see the dark blue line. It was also near the same level. So for example, here the dark blue line was even higher than the inventory. So it was 2017. And then in the following 2018, trailing 3 months retail sales dropped below the inventory number. And then the inventory started dropping in 2019, 20, and then in in 20 we saw a massive acceleration because of COVID. So COVID really hit the auto market in North America from first quarter. This dot is December 2019, so it was just before COVID. So inventory already saw some drawdown. Then this was massively accelerated, and you have to look at the scale. So significant over 100,000 vehicles inventory dropped, kept dropping. Now we changed to monthly, kept dropping. This was due to factory shutdowns, global supply shortages. You might remember the chip shortage and other shortages. And then Ford's US vehicle inventory bottom at below 200,000, super low. And then you can see how this affected the days of inventory. So basically, days of inventory tell you, okay, based on the trailing 3 month sales rate, if Ford stopped producing vehicles, for how many sales, for how many days could dealerships still provide customers with vehicles? And you can see during the period, the days of inventory dropped extremely low for the type of model Ford has. So we see here 24 days, 26, 30 days, and keep in mind the the days of inventory is affected by the sales rate. So if your inventory drops, but so does your sales rate, you might still have high inventory days. That's why the inventory days on its own is not a metric that tells you the full story. So you need to look always at these three metrics to get like the full picture. And why does this matter? So we can basically see two things. One, Ford's US inventory has reached record highs, but not only that, it has also been a record high in terms of days of inventory. And the reason is Ford simply doesn't sell as many vehicles anymore as they used to, as you can see here. So in this era, 2007, 2018, Ford sold still at near or above 600,000 vehicles in current on a trailing 3 months basis. and this is as of December, and this number is also as of December, so this is consistent in terms of seasonality. And Ford is significantly more than 10%, 15, roughly 15% below that level, but still has like a comparable level of inventory, and this is why the days of inventory is going up so high. So you might ask, okay, why would anyone care? So if you're an investor and you realize that Ford is running out of inventory capacity, and you understand how Ford accounts for vehicle sales. Again, they account for Ford sells vehicles to dealers, but if dealers run full, Ford can't sell basically vehicles anymore. Or I should say, Ford can only sell vehicles at the level that is actually absorbed by the consumer. And the consumer is taking up a lot fewer vehicles than Ford is sending to the dealerships. Otherwise, the inventory wouldn't rise as much. And you can see basically by the by the change in inventory how much, let me call it, over recognition of revenue Ford has done. There were some quite egregious quarters where there was a very quick inventory buildup. For example, in Q1, there was significant inventory buildup, and then in the third quarter as well. So there was a significant over recognition of vehicle revenue, and this basically has to come to an end. Ford cannot let this number grow to 100, etc. I mean, there might briefly, but the key story is that this significantly limits Ford's sort of ability to financially smooth their numbers, and ultimately limits their P&L, and therefore EPS generation to the vehicles they can actually sell. And the big picture here is that if you see Ford trading up in exuberant markets or something, then you could consider potentially shorting Ford. This is not trading advice. I just want to point out um, that Ford is basically inventory limited. And with that, I close this video. I don't want to make this very long. See you in the next one. Bye.